we will go over to Provincial Treasury and the various guests to introduce themselves. So over to you. Thank you.
Good afternoon, Chair. Good afternoon, colleagues. Good afternoon, colleagues from Treasury. My name is Noko Masipa. I'm a member of this committee. Thank you.
I'm aware of the fact that Honourable Bryant has indicated that he is may not be able to chat to us. His daughter has had a fall and he's with her at the hospital to get some stitches apparently, so he may not be able to converse with us at the beginning of this meeting. Okay, further members online, if you could just introduce yourselves.
Was I audible?
You were audible, Member Masipa.
Okay, thank you.
Good afternoon, Chairperson. Good afternoon, members on the platform. My name is Beauty Stoffels, and I'm also a member of the committee. Thank you.
Member Brinkhuis, I see you. Are you able to respond? I don't hear you. It looks like you've unmuted yourself. So, okay, I think with that, then I'm going to hand over to Treasury just to check that you can then just indicate your presence for us, and then also while you're doing that, perhaps just indicate who will be doing the presentations to us, because we're going to be receiving briefings on the Western Cape 20th Gambling and Racing Amendment Bill today, and we therefore, once those introductions have been done, then we can immediately move into that briefing.
Good afternoon, Chair. My name is Victor Sunna, the DDG responsible for fiscal and economic services. Head of Treasury has submitted her apology. We have a staff engagement that is currently happening, so she'll be able to join in later. I'm joined by my other two colleagues who will ask that they also introduce themselves, Owen and Claire, and also colleagues from the FTI Consulting. If they're in the meeting, they can also introduce themselves. Thanks.
Thank you, Mr. Senai.
Good afternoon, committee members. My name is Owen Wilcox, and I'm a Chief Director in the Provincial Treasury. Thank you.
Good afternoon, Chair and committee members. My name is Claire Horton, and I'm from Fiscal Policy. Thank you.
Maybe I can introduce myself. Good afternoon, everyone. My name is Laurie Binger. I am Managing Director of the Economics team at FTI Consulting, and I'm joined by my colleague, Professor Willem Boshoff. We have been assisting Treasury throughout this process. Willem?
Good afternoon, colleagues, and thanks, Laurie. My name is Willem Boshoff. I'm Professor of Economics at Stellenbosch, and I'm assisting at FTI on this and a range of other topics related to gambling.
Thank you very much there for your introductions, both Laurie Binger and Willem Boshoff. Welcome to this committee meeting on finance dealing with the Gambling Amendment Bill. I think I'm going to sort of just hand back to Provincial Treasury. Perhaps if you could start with your presentation there. I'm not sure who will be dealing with that. I see Astrid Miller's hand up.
Good afternoon, Chair and members of the committee. I also just wanted to introduce myself. I'm the State Law Advisor at Legal Services, Director of Legislation, Department of the Premier.
Thank you very much, and you're most welcome.
Thank you, Chair. We will start with the first part of the presentation, and then FTI will then be dealing with the technical aspect of the presentation. I'm not sure if I can share it on my side, Chair, or Secretariat will share it.
Okay, I can see the presentation has come up. Thank you.
Thank you very much, Chair. The presentation is going to briefly talk to the context, the background, comments received, proposed update to the bill, how the economic opportunity test is determined, the manner of payment, as well as the content of the bill. And we've got also an annexure there for the information of committee members. Slide is not moving. Let me. Just to start off, Chair, with the context. With the context of the presentation, here what I would want to just emphasize for the committee member is that the Western Cape 20th Gambling and Racing Amendment Bill is a money bill, and secondly, it provides for the payment of what is known as the Economic Opportunity Tax, or how we are going to refer it throughout the presentation, EOT, by the holder of a casino operator license, whose application for amendment of a license in order to relocate is granted by the board. So the bill empowers the provincial minister to make regulation clarifying requirements, which relates to firstly, payment of EOT to the board and into the Provincial Revenue Fund, and then secondly, provision of statement by the CEO of the board. And then, Chair, the regulations were published for comments and are subject to the proposed Western Cape 20th Gambling and Racing Act coming into operation. Just to continue in terms of the background, as a province chair, we have 5 casino operator licenses, which were awarded in distinctly demarcated areas. Those areas for the benefit of members is the Cape Metro in Goodwood, Breda Valley in Worcester, Overberg in Caledon, Southern Cape in the Mossel Bay area, and then the West Coast in the Langeban. So the casino operator license exclusive for a period of 10 years, subject to which an exclusivity fee would be paid. Over time, Chair, we have relied on different research reports to inform policy of the draft bill since 2018, particularly for the relocation of a casino into Cape Metro and how EOT would be imposed. The latest draft bill, Chair, was published for public comments, which closed, and that process closed on the 7th of July 2025. So in terms of the comments that were received, they were received from the following stakeholders: the Western Cape Gambling and Racing Board, Department of Economic Development and Tourism, Sun International, as well as Sun. And just to provide, Chair, the high-level summary of the comments that were received. Firstly, it was just concern on the additional administrative requirements placed on the board, concerns on utilization of the tax revenue, the incorporation of EOT in subordinate legislation, concern on the implication of relocation on the provincial gambling market, disagreement with the introduction of EOT, disagreement with method of calculation, as well as concern regarding commitment made to the board and payment of EOT. And Chair, these comments were then included in the metrics that were handled between the state law advisors, tax counselors, as well as FTI Consulting in terms of addressing the concerns that were received. The proposed update to the bill, Chair, The amendment to the bill provide for the improvement to the bill and to account for the comments received, specifically related to provision of various definitions, administrative consents, refinements to the sequencing and weighting of specific clauses, as well as provision for two methods of payments, which is upfront or ongoing monthly payments. And then in terms of the determination of economic opportunity, I'll try to simplify it, Chair. I think colleagues from FTI, they will go into detail in terms of the calculation. I think, Chair, in simpler terms, EOT is the improvement economic opportunity that accrues to a casino when relocating. So the science behind it is that a casino would realize improved opportunity to increase gambling revenue as a result of relocating the revenue that was not reflected in the original bid fee. And also to emphasize, Chair, is that EOT is not an additional tax or it's not a new or separate tax, but it's simply an increased bid fee. So it simply represents an upward adjustment to the original fee that is commensurate with the enhanced economic opportunity created by the relocation. So EOT is not only aimed at adding revenue to the PRF or Provincial Revenue Fund, but in the main, it is to ensure that there is consistency and fairness of treatment across all casino operators in the province. So in terms of also calculation, Chair, continuing that, in simpler terms, what EOT does, it compares the present value of the original bid fee with the present value of the increase of the income that they earn after the tax adjusted gross revenue. So present value, Chair, is calculated by discounting the bid fee, adjusted gross revenue, as well as gambling taxes to a period of January 2000 using interest rate of 11%. And as I indicated, I think FTI will go into detail and clarify the method for members. And then the account for original fee paid headline is then used, and then to account for original fees paid, we then use headline CPI to adjust. So also to emphasize is that the present value of the original bid fee is then divided by the present value of the after-tax adjusted gross revenue over the first 10 years of operations. And currently, Chair, the weighted average ratio across the 5 casinos is 2.05%. And then EOT is therefore arrived at on the same basis as I indicated, but I think FTI will unpack on that method. In terms of the manner of payment that is proposed in the bill, option 1, Chair, is the upfront lump sum payment, and then option 2 is the ongoing monthly payment, which also it will be unpacked in the next presentation. Just to share with members the contents of the bill, Clause 1 of the bill, Chair, it provides for the insertion of a new section 44BA in the Act, which includes the following provisions. 1 is the circumstance in which EOT is payable, the name of the tax, and that the method for calculation thereof is set out in Schedule 5 of the Act. And then 2, for the 2 manners of payment, as I've indicated for the EOT, namely upfront lump sum payment or ongoing monthly payment, as contemplated in the same section to the Act. And thirdly, for the holder of a casino operator license to inform the body in writing of its chosen manner of payment in respect of the EOT prior to the commencement of operation of the relocated casino. And then 4, the details relating to when the relevant payment in respect of EOT should be made. And then lastly, in the case of ongoing monthly payments, the payment period is clarified as 10 years, less the period taken for the rent value in the rent value of the EOT to reach the inflation-adjusted rent value of the bid fee paid. The details of when the 10-year period commences is specified and that no payment of the EOT is required during this equalization period. That is the period taken for the aggregate or tally of the monthly amount calculated in accordance with paragraph 2B of the same schedule that I mentioned earlier to equate to the inflation-adjusted rand value of the bid fee paid in terms of Section 44B. So that is, in essence, and then just to also continue in terms of the contents of the bill, it also provides roles and responsibility of the Chief Executive Officer of the board, which are detailed to ensure that the time of commencement of the payment of the EOT, including requesting relevant information from the casino operator as may be reasonably required, and then that the liability for and payment of the EOT applies to the holder of a casino operator license whose application for relocation is granted before or after the commencement of the 20th Amendment Act, and also that the responsible minister, that is the provincial minister, may by regulation prescribe certain practical arrangement or requirement of an administrative nature relating to the EOT, and also provides for the various definitions used in the bill. Clause 2 provides for a new Schedule 5 detailing the upfront lump sum payment specific to a relocation to the Helderberg area and ongoing monthly payments which are applicable to any relocation and definitions. Clause 3 provides for the amendment of the arrangement of sections of the Act. And then Clause 4 provides for the date of commencement of the 20th Amendment Act. And Chair, that is at a high level what the bill provides for. We've also provided an annexure which provides a list and timelines of the previous draft bill related to the imposition of the economic opportunity tax, which were published for public comment, Chair, which are listed there below. So from my side, that is the high-level, Chair, that I would provide. But as I indicated, Chair, FTI will then come and provide more of the technical aspect of the presentation. Thank you very much, Chair.
Thank you very much, Mr. Sena. So I think we can then move on to the FTI presentation at this stage, and then members will then have an opportunity to ask some questions at the end of that presentation. Thank you very much. Yeah, you can go ahead when you're ready.
Thank you, Chair. Good afternoon, ladies and gentlemen. I would like to give you a sense of the methodology and approach that underlies the calculations of the EOT. And I'll try to do it in a way that is not too technical, but to underline some of the principles that guide the calculation. So, I assume everybody can see my screen.
Yes, certainly we can. You can go ahead.
Thank you, Chair. So when thinking about the EOT, the basic principle here is that when relocating, a casino gains an enhanced so-called economic opportunity. In other words, an enhanced ability to earn GGR at the new location, which was not paid for originally. The original bid fees paid in the late 90s and the early 2000s by the casinos were for their particular locations. And so the basic idea is that the EOT is an enhanced bid fee to top up the original bid fee to reflect the larger opportunity that is gained by moving the casino to a new location. And so throughout this presentation, that is the idea behind. You will see we look back first to how the bid fees originally related to the GGRs in the original location. Then we use that to calculate what the bid fee should have been in the new location. of course, after giving credit for the original bid fee. That is the basis, and of course that, from an economics perspective, ensures consistency, or if you want, fairness, between the casino operators who are not relocating and those that are relocated, because it ensures that everybody is paying for the opportunity that they are currently enjoying. And please feel free, if of course we can take questions at the end, but if there's something very urgent, please feel free to interrupt. So I'm going to walk you through some of the kind of main approach. First, giving you a sense of the casino market in the Western Cape at a very high level, but then focus mostly on how we did the calculations for the EOT by looking at past bid fees and past GGRs and applying that to future or projected GGRs at the new location. Now, as was mentioned in the previous presentation, of course, the Western Cape operates 5 casino licenses, and the principal or the largest one is, of course, at Grand West, and then there are 4 what one might call outlying casinos beyond the metropole, spread out, and these were really allocated in the 90s and early 2000s in line with the destination approach at the time. So the idea was to place the casinos actually relatively far from the large demand pools, and of course what has happened over the past, and initially of course generated a substantial amount of revenues, but over the past decade or so, casino revenue in particular has been declining in the Western Cape, and this despite, of course, the province having fewer licenses than Gauteng or KwaZulu-Natal, and that has prompted a re-examination of how to approach casino regulation. Of course, cognizant of all the other gambling developments that are going on at the moment, including online or sports, online sports betting. So FDI has been assisting the Treasury with a wholesale reconsideration of the gambling landscape, which I won't cover here, of course, but it is just useful to reflect on where this relocation comes, or approach to relocation comes from, in trying to think about thinking about how to generate perhaps more tax revenues, but also taking into account all the other effects, benefits and costs of casino placement in different areas. Of particular relevance to this presentation is the relocation of the Caledon Casino to Helderberg, where we've assisted both the Treasury and the board. And a large part of the work there has been around estimating the size of the gambling pool, if you want. In other words, how much GGR can a casino feasibly generate if it is to be located in Helderberg? And as you can see from that a graph there on the right, where we try to show, of course, the moment you have a Helderberg casino, you are, of course, overlapping to some extent, at least, with what one might call the catchment area for Grand West. And so you have to take account of both the gains that you'll see likely in GGR, but of course also the cannibalization or the competition between the two casinos once it's been established. So a lot of the work over the past 2 to 3 years has gone into different methods to estimate that, and of course the various parties have looked at different ways to do it, and we have ourselves approached the estimation of GGR in different ways. Some of it, or one approach based on Grand West customer data, loyalty customer data, to think about how where those customers are located and what their propensity to gamble is, and to use that to estimate GGR if one assumes a certain profile for Helderberg, and also using information from more kind of aggregate information, alternatively from different casinos, and linking total GGR at a casino with the size of the income pool around. So the overall approach for all of the different parties, and this is in line with international practice, is to look at what a casino generates more of its revenue from closer from demand, in other words, from gamblers located closer to the casino. So that's why information about where the gamblers are and the size of the income pools are so important, and that's why ultimately the Helderberg location was an important location in that respect, because it ensured a significant increase in GGR without a substantial loss because of the cannibalization with Grand West. So there was a lot of work on that, which we will of course not traverse here. But what is important for our discussion is that we have estimated GGR in a variety of ways, and that it matters here because the bid fee and the EOT, it depends on the GGR estimated. So with that in mind, given that relocation, question arises: how can one calculate an EOT, or economic opportunity tax? As I said, when relocating, the idea is that the casino acquires an enhanced economic opportunity for which it is required to pay, and which was not fully reflected in the original bid fee. If I may use a very simple example, suppose the bid fee was R1, or say R2, to make it even closer to the amounts in the actual bill. Let's suppose the bid fee was R2 originally in the 1990s or the late or early 2000s, and let's suppose the casino in the subsequent 10 years of operation, starting operation at its location, earned R100 in total of GGR. Then you would say, well, the bid fee was 2%. It was R2 divided by R100. Now the casino moves to a new location. This new location does not generate R100, it generates, say, R200. For illustration purposes, that means 2% of R200 is payable, which means R4. So the casino, in a way, owes R2 in terms of an enhanced bid fee. That's a very, very simple example, of course, and a lot of additional and much more sophisticated calculations that go into the story, but that is the principle here. And all the different robustness checks are really to make sure and to check whether it's exactly R2 or what is exactly that. Is it 2%? Is it 3%? To estimate those values more accurately. So the idea is to take the original bid fee categories in the Act that apply to the original casinos, and to try to infer from them what would be the best bid fee. Now, the problem for the relocation, or the challenge, is the original bid fee categories applied to the market as it was contemplated in the 1990s. So there's a category for one large metropolitan casino, a bid fee for that, and then there are two categories for smaller non-metropolitan metropolitan casinos. And of course, the relocation in this case to Helderberg, of Caledon to Helderberg, means that there's a new casino which is effectively also a metropolitan casino, but it is not of the size, and it's very unlikely to be of the size of Grand West, because of course it's while it has access to a larger pool of income, that pool of income is much smaller than the pool of income to which the Grand West has access because of its unique position within the metropole. And because it's towards, if one might say, the periphery of the metropole, it also has a certain feature of the outlying casinos because it is tapping into non-metropolitan areas as well. So you have the relocated casino is effectively a combined version of the different casinos that you have currently, where the dominant part is certainly a metropolitan feature, but with some of these non-metropolitan features that should be in there. So that means if we need to somehow use a kind of average or get a weighted average of the original bid fee categories that was used in the 1990s to get to what should be a sensible bid fee for this type of casino. So if I might go back to my original example, let's say the original example, it was, I don't know, 2 Rand paid by Grand West for 100 Rand of GGR. It might be that another casino would have paid 1 Rand 95 for 100 Rands, or 2 Rand 10 or something. So the casinos paid slightly less for the smaller casinos than Grand West in percentage terms as well. And that just reflects the sheer size of the Grand West casino at the time. And so you want that to feature very prominently, but temper that because it is not exactly the same metropolitan casino. So what we do is we calculate those, do those comparisons for each casino, and then we have different ways of averaging between Grand West and the different smaller casinos to get to the 2.05%, which the committee will see is in the bill. So that's what I will try to explain over the next few slides without, as I say, going into too much technicalities. It is the idea of getting to this in-between category between this very large metropolitan casino and these outlying casinos. What we compare, of course, is the bid fee. And we compare that, I've said, to GGR, but more specifically, we compare it to adjusted gross revenue, or which is after tax GGR. So it is, in other words, all the money that is gambled minus the winnings paid out minus the standard taxes that is imposed on GGR. So to get a sense, so EOT is separate from standard casino taxes. And we then project, of course, we have those actual numbers for the different casinos, and that's what's shown there on the right top graph. For confidentiality purposes, we just show you an index value, but of course, it's clear Grand West will be a very large part of it because it's a much larger casino than the others. And then what we do, in the bottom graph, is to kind of predict, apart from looking at what the original casinos generated in their first few years from around 2000 to 2024. That's the first part of the calculation. We then say, well, what will Helderberg specifically be earning in future for the first 10 or 20 years of its operation? Now, that's, of course, a very complicated, or if you want to say one needs to be quite brave in making these assumptions, as you can imagine. Ask any macroeconomist to make these long-run predictions. So we generate the predictions, I think, in a relatively a robust way for the near term, and then we extrapolate that on the basis of what projected GDP is likely to be. Of course, that entails in itself a number of assumptions, and I'll come back to the difficulties here of predicting Helderberg's revenues going forward and why it's necessary not to go too far into the future. You'll see I show you here 20 years, but actually our calculations are mostly around the first 10 years. The moment you move away from that, it becomes really quite difficult. So, getting into the kind of detail, I've already given you a sense, and I will give you maybe just a bit more information about each step, what we've done. As I said, the first part is what we need is we have to look at each casino, what they paid for their bid fee originally and what they earned originally. And we could do that calculation, of course, to actually compare the bid fee, which is paid at the start, and the GGR, which is generated over time. You need to first discount all of the GGRs back to a certain point in time. And we use a discount rate of 11%, which we'll come to later. Then that gives us a ratio for every casino. Then we get an average ratio in the second step. Our average is 2.05%, which is based on a weighted average, and that means we give Grand West a greater weighting, and the weights are the GGRs, the size of the GGRs for the different casinos. There are different ways, alternative ways that we've also looked at. All of these different steps have involved a number of alternative testing and robustness checks. So I'm just presenting you with what we consider to be the most appropriate or acceptable version. And then the step 3, we then calculate the actual EOT. In other words, we say 2.05% is what was paid, what would have been paid, if you want, by this type of casino if it existed in the early 2000s. And then we take and project what the GGR will be in step 3 in the first 10 years for Helderberg, and we take and multiply it with 2.05%. And that gives us the gross economic opportunity tax of just shy of 100 million rand in January 2025. We then adjust that, of course, because the casino which is moving, in this case it's Caledon, had already paid its bid fee to be in Caledon. So we need to adjust for that. So we subtract the inflation-adjusted value of that bid fee to get to the net EOT of 78.48 million. We do all of this in January 2025. Most of this is because of many of these calculations and the like were, of course, around draft bills and updated subsequently. So it is being done and January 2025, and you can, of course, adjust that to get to the actual day-to-day, which is 81.22 million. So it's a further adjusted for inflation for another year. And then in this final step, that's the money payable. We then explore how it could be paid. And as was mentioned in the previous presentation, it can either be paid upfront, which would mean that would be the way in which the original bid fees were paid. They were paid initially. Or alternatively, one can also pay this. Also, we suggest a monthly payment option. Monthly payment option, which has the benefit, as I'll show just now, of dealing with that uncertainty, because you can imagine that we've now predicted GGR going forward to get to the actual value. But if you have monthly payments, the payments are based on actual GGR. So by having that option, the casino operators relocating can potentially decide how confident it is about being able to predict what it will earn and whether it would prefer rather taking the risk of paying monthly, which might, depending on how it turns out, might save it money. So those are the 5 steps, and much of the rest of the slides that's coming really discuss some of the key assumptions that underline the different steps, and we are happy to discuss each of these. But let me give you a sense of some of the key assumptions here. The first one, as I've mentioned, is to calculate this weighted average between the casinos to get a sense of to create this casino that is metropolitan, but is not Grand West. It is metropolitan, but with features of non-metropolitan casinos. How we need to do some type of a weighting, and of course, it is, you could, of course, also simply use the Grand West ratio. We have done that in our analysis, and it has given us quite similar results. But the weighted average approach, is better reflective of the type of casino that is being contemplated, the location of the casino in relation to Grand West, because it's not exactly the same type of casino. We also looked at the original exclusivity fees, but the exclusivity regime has come to an end and we have excluded those. So originally we did both bid fees and exclusivity fees, but this the presentation and ultimately what is in the bill focuses on bid fees, because of course the bid fee is not for exclusivity, it is for access to a particular economic opportunity. That economic opportunity is affected by the presence of competitors, and may also change in the future. But for the moment, the GGR prediction is on the basis that there is a Grand West casino next door, and that the other casinos are where they are at the moment. The second key assumption in all of this is in terms of what period one looks at when you are comparing the bid fee. Now, it's quite important because it is tempting to think that a longer period will lead to a higher tax. It's not necessarily the case. So if one is comparing, let's suppose we said that a bid fee is paid for an economic opportunity into the future, but to actually get to a number where you can compare the bid fee and that future GGR, you need a cutoff point. And we've chosen 10 years, and one might, of course, also choose 20 years. If you choose 20 years, all that is going to happen is you will need to do the calculations for the original bid fees also for 20 years. And then you will see, and we have done that in our original calculations, does not actually make such a big difference. And then there is a principal reason then for choosing a 10-year period rather than a 20-year period. And that is, of course, because, firstly, because of the uncertainty and because of in standard discounting terms, the bulk of the present value, the value of the GGR today, is going to be the GGRs that are closer to the current period, and the values of the GGR 10 years from now, that's going to be much smaller when you're discounting. So they're going to be play a much smaller, much less of a role in the actual present value of GGRs. And added to that, we advise that it is more appropriate, given the uncertainties associated with this, with the industry at the moment, that there is much more uncertain today in terms of casino revenues compared to 25 years ago, because of all the other changes in the gambling landscape. So it makes it very difficult to actually predict what GGR will be beyond 10 years, which is already challenging. And of course, it is rational to expect that there will be further changes in the casino landscape, further relocations and the like, which will affect the GGR projection, which you cannot control for now. So it is for that reason that we have suggested looking at a 10-year horizon when trying to compare bid fees to what the new location can give the casino. A third key assumption that is important to take note of is the interest rate. We've used, ideally you would like to use the same interest rate across the calculations. Ideally, you would like to use some type of a firm-specific WACC or something that would reflect the time value of money for the particular casino investor, that none of that is available. And we have used average prime over the period 2000 to 2024, which is 11%. There are other discount factors that one might also consider, but the prime rate is a valid one. We think that it is better to rely on an average long run value rather than having the point. And one would think it would make a big difference, but actually, the moment you have these point different values for the prime rate, you're actually also implying that when you did this calculation originally, the casino would have done that. But the casinos and investors would have some average view of the future, some average rate that they would use, and rather than having explicit forecasts for a WACC at every point in time over 10 years. So we have chosen average rate there. There are other reasons we are aware, of course, that the prime rate today, or that average, is a little bit lower than the prime rate averaged in the first 10 years. We have used the 11% because we think there is uncertainties to account for the uncertainties. Remember that the higher the prime rate, the smaller the present value will be of the GGRs that we calculate for the original casinos, and the bigger the bid fee will be. And so we were quite concerned about the impact that has, given the uncertainties in terms of predicting the GGR. So you will see throughout our calculations, we've often erred to try and choose a conservative value that reflects the commercial uncertainties that the industry is in. And that is, I think, the one of the reasons for having that 11%. The other one is just to have consistency, because if you have a high interest rate initially, but then you use 11% when you get to the second leg, so in other words, when you take the bid fee ratio that you've calculated for this new type of casino and you apply to Helderberg, I mean, currently the expected prime is about 11%, in part because of the success of our monetary policy in bringing down inflation expectations. So 11% is the current one, but there is a bit of a mismatch in using a high interest rate in the one and then a low one there. So we've suggested using 11% throughout, and to generate a reasonable estimate for the EOT. The actual GGRs that we use for Helderberg, that's the final. The final assumption one that I want to cover there briefly. There, as I've mentioned, that comes from our earlier work. We've relied on two possible forecasts, the one that differ in terms of how they deal with the propensity to gamble, and of course they generate slight differences between 7 and 8 million rand in the EOT estimates, and of course we said again that the realized GGR may actually be weaker than predicted for several reasons, and we have therefore again opted for a conservative approach given the macroeconomic climate. Now those are the basic calculations that go into the EOT, and then the final part of it is to say, okay, that gives us a number, and how is it payable? Of course, if it to get to the actual payable amount, you would then simply take in our case, 2.05%, which is the bid fee ratio that we calculated, the weighted one for the original casinos, applied to the GGR that is forecast, and that then produces the estimate that I've mentioned earlier. And of course that payment option, the upfront payment option, that aligns quite closely with the original bid fee, which was also paid in advance, and which provides a certainty to the operator, but it has the downside that it's based on a forecast of GGR. because that's how we get to the tax calculation. So there's not complete tax accuracy if you want. Option 2, if the operator chose to go for that one, there the 2.05 is applied to actual monthly after-tax GGRs. And of course, the challenge there is, if you look at the graph here on your right, of course, initially, because in the case of Caledon, you had paid a bid fee for Caledon, and we are calculating your overall bid fee that you should have paid as if you never, as if you're a new casino. So you need to provide them with a credit there initially. And so in this case, and again, it's just just as an indication for the committee to ensure confidentiality of the GGR values. I just show you here the initial EOT, and say in 2026 would then not be payable because you would first need to receive that credit for the original bid fee and a portion of that in 2027. And so then somewhere later in 2027, the EOT actually becomes payable. So it's easier. The calculation, of course, is easier in the case of option 1, because you just subtract whatever was paid inflation and of course an inflation adjusted version of that before arriving at the final number. But here you don't have that opportunity, so you need to allow for a certain period, as was also mentioned in the previous presentation. And of course, the benefit there is you get complete tax accuracy because it's based on actual GGRs. But there is, of course, the trade-off, because if it turns out that the GGR is in fact higher than predicted, it would have been better or for the operator to pay the upfront payment. But that is if we think in terms of the uncertainties in this industry, this is an important option to be providing to relocating casinos. I want to end off, Chair, with just a brief comment on the generality of the 2.05%. So one might say, but this 2.05% was calculated for Helderberg. Surely can it now? What about future relocate? What about other relocations? Now, of course, it would be incorrect to say the 2.05% is calculated for Helderberg. The 2.05% is a bid fee that is the bid fee that would have applied to what we see as a smaller metropolitan casino. So we've taken Grand West's bid fee originally paid versus its GGRs. We looked at all the other casinos, and then we got a bit of a weighting to create what could be called this smaller metropolitan bid fee. So that applies. That is for any casino that would seek to relocate, and that would have where it would have that metropolitan feature of the relocation. In other words, the relocations that one may very likely expect here are relocations by the remaining 3 casinos, either to other areas or peripheral parts of the metropole or adjacent areas, so like the Impala, or potentially to the waterfront, or if it is beyond Cape Town, possibly to George. So this is all just, so it is very unlikely that relocations will be from one outlying area to some complete outlying area. And so the 2.05% bid fee ratio can be applied to all of these types of relocations. It does not have to be relocated or recalculated for every relocation. Of course, what must be done is the calculations for the GGR, the actual numbers that would apply in the particular relocation would have to be estimated again. In our view, this approach and the approach that I've tried to describe to the committee today ensures fairness, because it matches the GGR that is generated at a particular location with the bid fee, with a bid fee. And it ensures that those that choose not to relocate at the moment are not paying more effectively than a relocating casino. If there was no EOT, then you are actually paying much less for the size of the GGR that the casino can generate at the relocation. Chair, that is a summary of the methodology and the rationale, and we're very happy to take questions. Thank you.
Thank you very much to you, Mr. Bunga, and also to Victor Senna for the presentation from Provincial Treasury's perspective. Certainly, I think just from a perspective of the committee, obviously these are fairly detailed presentations, obviously giving us then the flavor of the amount of work that would have gone into this exercise to come up with that percentage of 2.05% and the logic behind that, and also then the logic behind the discount rate of 11%. So I think what we can do now is give members of the committee an opportunity to raise some questions on this whole aspect, and any comments that you may have that we can direct both to PT and to FDI, being the consulting firm that has done the work. So I'm just looking through members over here as to who will be putting up their hands to ask the first questions in this regard. So over to you, committee members. I'm looking to see who would then have certain questions there for us. Right, I must say I'm not seeing any questions at this stage, but I think clearly that I imagine that the 2.05%, what is indicative there is that I imagine in terms of the weighting that would need to be undertaken, that for a metropolitan casino, that percentage would then certainly be an element higher than the 2.05%, and I would presume then less than the 2.05 for the more outlying casinos. Now, I'm just thinking of the prospects that one could then get in one of the outlying casinos then saying, well, should we try the waterfront then to relocate a casino to that? And then perhaps just any thoughts on the extent to which a 2.05% would then be relatively fair then for someone going into that area, given that the legislation has now been written in the way that it has to deal with that. I suppose the other area that had gone through my mind is how one determined a discount rate of 11%, but I think you have gone and explained that. So perhaps those are the type of thoughts or question that I might have while I'm looking at other committee members then to see if they would also like to add to the questions. Honourable Masipa, you can go ahead.
Chair, thank you very much, and also thank you for the for the Provincial Treasurer's presentation on this. I'm just really, Chair, on the high-level summary where, the issue is the disagreements that the department is citing here. Maybe to understand as to whether there has been some form of engagement to kind of sort those disagreements out, because I'm just worried that these disagreements, if they are obviously the majority of obviously the licensees, it might become an issue. Maybe even the question is, from a legal perspective, what will then be the implications at a legal perspective level? Maybe this kind of agreements, how would they impact the whole bill? Would it have any constitutionality problem or not? That's for now, Chair, if I can hear if there is no one, obviously, constitutionality issues, and obviously if there has been some kind of work around trying to find an amicable solution around those disagreements. Thank you, Chair.
Thank you very much, Honourable Masipa. Yes, I think that could well be, it would be interesting to have some comment on that. I'm also looking to Astrid Miller then on any comments that there may be from that legal perspective in terms of the scrutiny and the discussion that no doubt would have taken place in crafting what has been crafted in this amendment bill to date. I don't know if there are any further questions there from members. Otherwise, I think we can hand over to the team to hear if they are able to give us some responses there to that. Okay, well, waiting there for some response. I'm just also been thinking to the extent of relocations of course casinos elsewhere in the country. Has that taken place? And if it has taken place, how has that been handled? In terms of any form of practicality that has taken place, maybe also what happens in other parts of the world in dealing with this type of situation. Astrid, I see your hand.
Chairperson, I would like to provide a few comments regarding the constitutionality of the bill. And I think Provincial Treasury could then speak as to how they have considered the comments. But just in terms of constitutionality, the legal threshold that the bill has to meet in order to be constitutional is rationality. So there one looks at a consideration of the relationship between means and ends. In other words, there must be a rational link between what the government is trying to achieve and the means that they have chosen to achieve it. And rationality is actually a very low threshold. Our courts don't look at whether government should have chosen a better means to achieve its objective. They look at whether the chosen means, so this bill and the EOT that's to be charged, is capable of achieving the objectives. And in the past, the bid fees were paid by casinos when they entered the market in the Western Cape. Provincial Treasury are now proposing to impose an EOT. And this is a revenue generating mechanism for the province, which also is consistent with the imposition of bid fees in the past. And originally, casinos gained a benefit from entering the market, and now they will gain an enhanced benefit from relocating, which would not have been captured in their original bid fees or taxes. And as Provincial Treasury have explained in the memo on the objects, the EOT will ensure fairness and consistency in treatment. And there's a clear rational link between the means and ends, which again, that is the threshold that has to be met, which would then mean that the bill is rational and constitutional, and the provincial legislature has the power to impose taxes. And Provincial Treasury also followed a rational process before deciding to propose this EOT. They commissioned extensive research. They published numerous draft bills that were referred to. And they also considered all the comments that were received. That doesn't mean that they had to align the bill necessarily with all the comments. And like I said, I think Provincial Treasury would be in a position to speak to that. And also Provincial Treasury, they have met the procedural requirements in that they have also introduced the bill together with the province's budget. So all the legal requirements have in fact been met, and therefore the bill is rational and constitutional.
Okay, thank you very much. Yes, I think the other aspect that if one thinks about it, that in applying an EOT, what one would then have is a situation if you didn't apply some form of economic opportunity tax, then there would be, the argument would be there from the other holders of licenses, is that then surely we can then also go and move our casino to another place where we believe we're going to earn, have better earnings, without then needing to pay some form of top-up for the benefit of being in an area that is likely to provide a greater level of revenue. So I think the logic and the rationale would then be that there needs to be that element of compensation to apply that, the fairness and the leveling of the playing field for everyone. Okay, I don't know on the some of those other questions whether Provincial Treasury or FTI wish to make some comments over there. I see Claire Orton, I see your hand.
Thank you very much, Chair. I just want to also emphasize a few things in terms of what we're trying to convey in the presentation. Specifically, FTI, I think, would be better placed to deal with the questions related to the 2.05% as well as the 11% discount, and if casino wished to relocate to the waterfront. But I would like to reiterate, you know, as has been said by legal services and what was said up front in terms of the presentation made by PT, the purpose of this bill is a money bill. And I think, so its primary purpose is to raise revenue for the province, as well as to promote fairness and consistency of treatment. And as explained, there previously was a bid fee, and this really is the extension of the bid fee to link the payment of an EOT to the opportunity that would now arise versus the status quo. So we try to capture that enhanced economic opportunity that is rendered with the relocation. So in terms of the comments that we received, yes, well, we did publish the bill for public comment, and it was published on the 6th of June. For a period of 30 days with a closing period of 7 July. And the nature of the comments that we received, as was indicated, we did receive comments from 4 parties, the first being the Gambling Board, which is largely of an administrative nature, their comments. In other words, the bill does place some onus in terms of the requirements for the board. Additional responsibilities are placed on the board. So they did raise some concerns in terms of those responsibilities and their concerns. We have managed to address some of those concerns in terms of the recrafting of the bill, but other concerns we haven't been able to always address, but we do feel that those requirements are not overly onerous on the board at all. And the board is actually getting additional capacity related to broader things in terms of the board being able to respond to a changing gambling environment. So we have engaged with the board in terms of the requirements placed on the board. We have alleviated some of the obligations placed on the board. And we feel that, you know, there's nothing particularly onerous. In fact, much of it can be done as part of day-to-day activities in any case. Then there were other comments that we received. The one was in terms of, and you know, some of them have been alluded to, and obviously we're not going to be able to address every single comment because they were quite numerous in terms of comments we received, and some of them are actually on a policy principle basis, which we're not necessarily able to resolve all of them. So the other comments that we received was in terms of the utilization of the tax revenue. As you will note, we don't specifically link what we will utilize the revenue that will be derived from this economic opportunity. And really the money is to flow to the Provincial Revenue Fund and to be utilized for provincial policy priorities. So that, you know, there was a concern, should we earmark some of that money for the impacts of gambling? But there are other mechanisms that would be built into that license condition that would address those kind of related activities. For example, CSI commitments, as well as commitments being made to responsible gambling initiatives. Then in terms of, there was a suggestion that we incorporate the EOT into subordinate legislation as opposed to the Act. But given that this is a money bill, it really does need to be in terms of the Act. It cannot be placed in subordinate legislation. And as well as it's an extension of the bid fees, and the bid fees were part of the original legislation or as part of the Act. Then there were questions related to, well, implications of the relocation on provincial gambling market. FDI already did allude to some of that kind of research that was undertaken, but I think it's important to remind ourselves that this is a money bill. It is dealing with the economic opportunity tax. It doesn't deal with the matter of relocation per se. In terms of the policy, certain aspects of the policy determinations which are no longer viable or no longer in play, they have been, you know, they're no longer relevant anymore. And that's specifically related to the location of casinos and the payment of an exclusivity tax. So the board is indeed competent to decide on relocations, and there is guidance provided in the Act in terms of the factors that the board would need to consider. So that has been considered, and it was actually considered as part of the extensive research work that FDI has done for the Provincial Treasury in terms of looking at the overall casino gambling market and the possibility and scope for relocation. You know, I'd just like to reassure the committee that there is a lot of work in terms of looking at the impact on employment, impact on growth, and future gambling taxes. Then there was disagreement in terms of the introduction of an EOT, and this is something that it's impossible, I would say, really to resolve, because nobody wants to pay additional taxes. That is really a normal response. But we feel that the introduction of the EOT is a policy decision and is necessary to ensure consistency of treatment with the original bid fee and fairness of treatment in terms of the enhanced economic opportunity that will result as a result of the relocation versus the status quo. As was, I think, explained quite extensively by FDI in terms of how they calculated that. The other thing was in terms of disagreement with the method of calculation. Obviously, there would be, you know, differing views in terms of a possible calculation of a EOT. Provincial Treasury feels that this is a fair approach. It is reflective both in terms of what has actually transpired in the gambling market, as well as a reflection on the likely future in terms of finding that kind of unique space where you've got an outlying casino moving to the metro, but it's not quite the market of Grand West market. So we feel that there is a robust methodology that FDI has followed. Then there was an issue related to did we follow the Provincial Tax Process Act? And from our perspective and our view is that the proposed tax, i.e. the EOT, is not a new tax, but is simply the extension of the bid fee. And as such, this is not a new tax and has no further implication other than on a casino wishing to relocate. Furthermore, the provision relating to the bid fee preceded the provincial tax regulation process coming into operation and are deemed to have been imposed in accordance with the Provincial Tax Regulation Process Act. Then just to give another in terms of the flavour of comments we received, there was also an issue regarding commitments made to the board as part of the relocation of a casino, and would the payment of the EOT then be justified? So obviously we feel that the two approaches are different in the sense that it would be uncompetitive to preclude an operator from presenting a bid fee to the board, i.e. in terms of commitments made to the board as part of a request to relocate. However, there's nothing precluding another casino also having approached the board to relocate. At the same time of making a request to relocate, the industry was made aware quite some time ago that the province did intend to introduce an EOT, and was shown in the last slide in terms of that various versions of this bill have been published since 2018. The industry was also alerted to the fact that we would be imposing an EOT retrospectively. So we feel, you know, that where the industry may have made commitments, these commitments are separate to the commitments that the legislature through this EOT is able to impose. I hope that addresses in terms of the flavour of the comments that we received from the industry. So we have tried to accommodate them, but as you will note, some of these comments we received are issues of policy and where we have a different view on the policy perspective to maybe some of the role players. Thank you, Chair.
Thanks. Thanks very much, Claire, for that detailed explanation there. I'm going to Member Masipa's hands up. Let's just hear what you've got to say, and then you know, possibly if if there are some other comments, perhaps just to deal with the 2.05% and the 11%, if that is necessary, then from FDI. Member Masipa.
Chairperson, thank you. I think I'm covered with the constitutionality answer. However, I did not hear if there might have been issues with regards to those that have disagreement, if they feel that they need to go further in taking their disagreement to make it a legal issue. I assume that there is no problem regarding taking this matter higher to courts and so forth. If that is the case, then I'm fine. Just on a policy question, because I do get a question of consistency and fairness, that we're trying to, what was the inconsistency maybe, prior to this, that is being addressed. Maybe it's there in the details of the FTI consulting, but I think maybe if you can just simplify it in terms of the unfairness and the inconsistency that existed prior to this. One other area, Chair, just that I have just picked up on the FTI was the what you call the market performance and fiscal contribution. I'm not sure what page, but it's slide number 5. Slide number 5. I do note that in terms of the license allocated for Western Cape, we've got equal license with the KZN. Slightly, Gauteng has got more, and basically then you've got Northwest and Eastern Cape having that amount. What caused that inconsistency in terms of the collection, the tax? Because I do note that the tax collected for KZN is higher than all the others that have got 5 casino licenses issued in their areas. Yeah, I think that's it for now. I'm probably done with the questions unless, you know, the answers will require a follow-up question. Yeah, thanks, Chair. That's it from my side.
Thank you, Bemba Masipa. Yes, it'd be interesting to hear on KZN, but I guess if there's more gambling revenue, then they are probably bigger gamblers in KZN than us conservative people in the Western Cape. I see Prof. Willem Boshoff's hands up. I think from an FDI perspective, I suppose he can give us some response there. I'm also noticed that Advocate Kule is in the meeting as well. I don't know if there's anything that you may wish to add thereafter, but over to you, Prof. Boshoff.
Thanks, Chair. Maybe just on the last questions raised by Mr. Masipa. So I think firstly, just why is the Western Cape underperforming? Well, that's it. Of course, is part of the background and not necessarily relevant for our discussion here. But of course, an important part of the underperformance relative of our casino revenues relative to other provinces is that, I mean, in terms of where they are placed, and some of the other provinces, including Gauteng, there has been relocations and to better tap into pools, and they are better located. We followed a historical destination approach to place them a little bit further away from where the money is, if you want, which is in the metropole. So that is an important part of the reason. And so what one really wants is indeed to introduce more competition for the metropolitan gambling money, and that will generate and likely generate over time greater GGRs. So the EOT is really one little part of this whole process of trying to reform the gambling landscape and hopefully improve the performance relative to other provinces. In terms of the question about what you were asking about unfairness, what was the unfairness? It's really not what it was, but really what it might be. So it is about one of the casinos who's not relocating, saying, well, say Worcester or the one in Mykonos, saying, well, we're not moving, but we've paid a bid fee of X. We've paid a bid fee of say R2 for our 100 rands. But you, Caledon, also paid roughly R2 for your 100 rands, but now you're not paying anything extra, but you're making an extra 100 rand. So it is about foreseen expected unfairness rather than something that has happened already. In terms of the earlier question about the waterfront, of course, the 2.05% would also apply to the waterfront case, because the issue here is not necessarily in the case of the waterfront, one would think that such a casino might attract revenues not just from locals but also from tourists. But it would still be a smaller casino than Grand West, so it would also be similar in terms of features to the type of casino that we are putting together or creating by combining these different categories. And of course, because it's a percent, it scales with GGR. So if you earn a substantially larger GGR, even if it's from from tourists or from whoever, that is a substantial, will result in a substantially larger EOT payable. So it is, in our view, applicable to the waterfront case as well. I'll leave it at that.
Okay, thank you for that. I'm just looking to members. Have we covered what we would like to cover at this stage in terms of the presentations that we have? I see hands up there from member Masipa, so I'm not seeing any further hands. So I think at this stage I would like to say thank you very much to both to Provincial Treasury and to the FDI team for being with us today and for providing these briefings, which certainly gives the committee a pretty good understanding of what we are trying to achieve in terms of this 20th Gambling and Racing Amendment Bill. I think what we as a committee now just need to resolve on how we are going to take this whole process further and how to deal with that. But I think thank you very much on this Friday afternoon for providing us with these presentations. And, in effect, we can then release you now and say thank you very much for being with us. And also from the legal side, the legal advisors who've been with us, and therefore we as a committee then can continue with our further discussions, and you can hopefully start casting your minds to your weekend and the enjoyment thereof. So thank you very much for being with us.
Thank you.
Thank you very much, everyone.
Thank you very
Bye.
much. Right.
Thank you. Bye-bye.
Bye-bye. Bye-bye. Right here, I think, colleagues, I think we've now been through those presentations, and I guess we can now just look a little bit further to what we have on the agenda, and that really then relates to the discussion on the way forward for the bill, and I think there in particularly in relation to public participation and what we perhaps need to do in terms of that public participation. I'm not sure if any of you have given an element of thought to it, and whether you would like to try and chart a way forward at this meeting, or whether we perhaps want to go and reflect on it for a little while and then come back. I'm very mindful that we are now into a constituency week process, which for the next 2 weeks, which probably sort of delays that process for a period of time. So I think that obviously is one option that we could go for. Just on some of the thoughts that I've had, is I certainly believe that we do need to have a public participation, and it would probably be good that we do. What I'm just thinking about is that we have certainly at least one meeting where the public could attend, and perhaps possibly combine that with a virtual meeting, therefore a type of a hybrid meeting that we could have. There's also been some indications to me that we probably should hold a physical actual meeting in the Helderberg area just to allow residents of that area to express their views on a casino, even though the board has made that decision already, that we do that, and that we then also allow, any type of written comments and submissions to be made to us, and that we probably do need to provide a good few weeks for that to take place. And I think, being very mindful of the holiday period that we're going into. And, if I look over the next 2 weeks, I think we've got 2 public holidays there. And then later in April, I think in the same week, almost, we have the 27th of April and the 1st of May, clustered together. So, if we were on our public participation, I'm almost getting the sense that we might have to keep public participation open into, the end of the first week or the second week in May, so that we give ample time for anybody wishing to make a submission to be able to do that. So I'm sort of handing over to you as committee members to give your thoughts, and that we can just try and chart a way forward.
Chair, thanks. Sorry, Chair. Sorry, I didn't raise my hand. My apologies.
You can go ahead.
Chair, maybe if we can, I just thought that maybe you will give the procedural officer or Johan, to just provide us with guidance in this regard first, and then obviously based on their inputs, then we can basically, make a way forward. That's just my thoughts, Chair.
Yes, certainly very, very good thoughts. So I think handing over to you, Ms. Adams, on any thoughts of procedure, and to you, Johan Vermeulen, on your advice.
Really, primarily, maybe Ms. Adams, before you come in, is my first kind of money bill that we're going to deal with, and I think maybe proper guidance will really be necessary so that we don't make mistakes, avoid elementary mistakes at the beginning.
Okay, thank you for that, Ms. Adams.
Yes, thank you, Chair. Yes, Member Masipa is right. It is our first money bill. And also, given the nature of the bill, I think we need to be very, very careful in terms of our procedure. Usually a money bill is finalized within 5 days. In this case, we've asked the Speaker for an extension because of the nature of the bill, and we know how litigious the environment can be. And the advice to the Chair and to the committee is to, I think, not to rush for the bill too much and to give enough time for public comments. Generally, I think when we run into some trouble with the bill, it's usually because of the limited time we've made available for public comments. So for a bill like this especially, I would advise procedurally that we provide enough time, at least 30 days for comments. And like the chairperson said, that we would run into the first or second week of May if we decide to do public participation or public hearing. In this case, we usually take our guidance from the committee based on what was said in the presentation as well, in terms of where you would like to go, where you would like to advertise, how many public hearings you would like to have. I note that the chairperson indicated a hybrid approach in terms of public hearing and then focusing also on the written comments. So I think that is a good approach. I just wanted to clarify also in terms of the Helderberg public engagement, if that is going to be treated as part of the bill or perhaps a separate process to the bill. That's my question. I don't know, Johan, if you want to come in. Oh, sorry, apologies. Apologies. One more thing. Yeah, we touched on constitutionality. I think it would also be very important. Our legal advisor was in the meeting, But generally, they do require some time to provide advice if we ask. But I think the option is also there for the committee to ask about the constitutionality of the bill to our own legal advisor who has been assigned to the bill. That's also an option to the committee. Thank you, Chair.
Okay, Johan, do you wish to have some comments at this stage?
Chairperson, thank you very much. I apologize if there's some background noise. I'm actually lying here in hospital at the moment. Chairperson, I think Zaida has covered a lot. She said basically everything, but I think that this is a money bill. It's a very technical bill. I don't want to be presumptuous and say what the public will be interested in or not, or what, how savvy they will be on such technicalities and technical issues, because it's quite difficult sometimes to understand these money-related taxes and things. I'm just thinking out now aloud, Chairperson. If the committee decides to go to different areas, for example, I'm thinking ahead of what could possibly happen, and that could possibly also open up a whole maybe input from the public that might not be as relevant on the money part of this bill, and maybe they'll focus on other issues related to gambling. Should we have gambling in our area, that type of thing. So I'm just saying that is what the committee should think about, because that is also likely to happen. I would advise, well, not advise, but I would think that if one ask for input, that if we write as a committee now to the the niche market that we're dealing with, which is the Sun Internationals and these big corporations. There's only a few of them actually. There's only about 3, I think. And who else? And one will get the input from those institutions, Chairperson. And whether one will get much input on the money aspect of this bill from the general population, I'm not that sure. But I'm just saying, I think what I'm really saying is, if you decide to go to various areas, you may get a lot of input that is not relevant to the money part of this bill, but deals with broader issues related to gambling, maybe, or people asking why gambling in my area, why not in that area, things like that. But a public input process is definitely, as always, needed, because, like as Aida said, this is a very litigious environment that one dealing here when you're dealing with gambling and things like that. That's all. Thank you, Chairperson.
Okay, thank you, Ms. Adams, and to Mr. Vermeulen. I'm just see member Masipa.
Thanks, Chair, and thanks to Ms. Adams and Mr. Vermeulen, and all the best with your process there in the hospital, and speedy recovery. So, Chair, I think, I do agree with Johan in terms of this being a technical bill. And I do believe that we definitely need to give call it the interested parties to really express themselves. I do not know if the suggested 30 days is what the committee will agree on, but because potentially these guys, they could obviously, contest the bill itself. So I think we definitely need to give them an opportunity to express themselves. But I think based on the inputs that we have received, I think maybe the members can make a decision. I do not know if Johan will advise on that. Must we make the decision now to say that we open it for obviously written submissions, and then once we have received, evaluate. Let me go back. We open it for written submission and make the decisions that we are going to do public hearing, or should we, based on what we have received, the written submission, make a decision in terms of the way forward And I think that's probably, the advice that I would maybe recommend, Chair, that we seek, and then we take it from there. And really thank you, Johanna and Zaita, for your input, quite valuable. Thanks, Chair.
Yes, thank you, Honourable Masipa, for that, and obviously, thank you to Ms. Adams and to Mr. Vermeulen. I'm just thinking of what is the way forward, because on the one side, what I'm hearing is that maybe we must get some element of advice on all of the factors that we just need to take into account in taking that process forward, including I think the valuable and important points in terms of a public hearing and in gathering that public hearing, because what we are saying is we might well have the particular technical issues that are coming out of the industry in terms of of what the EOT is going to be, while at the same time, if we were to have a range of public hearings, we may well get other comments that are not strictly focused on this particular matter at hand. So, what I'm just wondering on, if we were then to say internally, let us just devise a plan on what we should roll out, and then possibly make that decision right at the beginning of when we come back after our 2 weeks of constituency hearings, our constituency weeks, and then we allow 30 days then from then onwards. If that is perhaps one way of dealing with it, that we try and from an administrative point of view, we get that level of advice as to all the factors that we should have, that we have a list of them, that we can then approve at a short meeting that we could have, round about the early in that, I think it's around about the 12th or somewhere, 12th or the 13th, that I think we are back after the constituency weeks. I'm just checking here now. Yes, I think it's the 13th is the Monday that we come back, or whether that's going to be a little bit late in what we're doing, Ms. Adams.
And Chair, I just wanted to say that our next meeting date is on the 17th of April. So if we're waiting for a meeting date, that would be then. But if we would need to, I think, seek approval if you wanted to have it earlier than that, or we can find a slot, a very short slot in that week, perhaps. But I can work on that in the meantime.
So yeah, I'm just looking to see whether there's perhaps that being the one route that we take forward. I see Member Brian's hands up, and maybe he's got an opportunity just to talk to us now.
Thanks very much, Chair, and my apologies for not being able to speak earlier. I've just had a bit of a busy sort of, unfortunately, a bit of a tricky day to deal with. But Chair, I have been following the proceedings, and I think we should go with your recommendation. And I propose then that we use the date of the next meeting, which Ms. Adams has mentioned, and factor that into the meeting, because we wouldn't need to have a particularly long session from what I understand. So that's my proposal. I'm not sure if Member Masipa or anyone else wants to add to that or support your initial recommendation.
Right. Thank you much. Thank you very much, Member Bryant. Member Masipa.
Chair, thank you, Honourable Brandt. I do second. I think we can move with that suggestion. Thank you.
Okay, no, I think that's perhaps the best way to deal with that. And then I think what the request would then be for administration to advise us on the best way forward in dealing with this, as it is a money bill, and the extent of public hearings that we need to have. Being on the one side, whether we visit all the areas where there are current casinos, or whether we then alternatively hold one that's a public hearing that becomes a hybrid hearing, where we could take online representations at the same time, in addition to the any written ones that we may have. And then perhaps just to add into that, whether it would then just be advisable to at least give the residents of that Helderberg area any opportunity, which they may rightfully or not rightfully have, to express any opinion on having that casino moving to their area. So that being that, and then just looking at the legal aspects, I don't know if there's what else we should cover in that request for the way forward. Ms. Adams?
No, Chair, I think we're good, but just to, again, just a disclaimer to say that it's the committee that will essentially need to advise on the number of committees, the number of public hearings that we will go to. Yeah, but we will work on that advice.
Yes, look, I must say, I'm almost thinking is, if we deal with the Cape Town hybrid one and the Helderberg one, the question then is, does administration believe we need to go further? And then that is also for committee. I don't know if you're happy with that we get advice on that then, colleagues, or whether you believe we should go to all the areas, because there are budgetary impacts on that, I imagine, as well. I'm not hearing anything, so I think if we perhaps just say that, and then, in the alternative, that you just provide us with that level of advice that we should rather go and visit all of those areas if need be, then committee can make that decision. Mr. Vermeulen?
Chairperson, yes, thank you very much. Chairperson, look, I don't think Mio Zahida will make any advice to say that you should visit which areas or more areas. My advice is, in my opinion, is, Chairperson, like I said in the beginning, because this bill is so technical and it mainly impacts on the, your Sun Internationals and your big casino operators, that those are the people that you need to approach and ask for written comment and whether they also want to come and speak to the committee. But obviously, Chairperson, the input of the public is most valuable and constitutional always. I'm not saying it's not valuable. I'm saying, of course, one should give that opportunity. But I don't know, Chairperson, if you go to these areas, because these bills are so technical, if the people will have a relevant input on this legislation, because this legislation, this piece is very, very narrow. It's just on this what they call it, EOT, economic opportunity tax.
Yes.
It's just on the EOT. So it's not for, if you go to Helderberg, for the people to then say to the committee, but we don't want gambling in our area, or this is the evils of gambling, or whatever. This is not what this is about. Those decisions have already been made. This is just about the EOT. So my personal opinion is, Chairperson, I would advise, let the committee advertise, like a member Masipa mentioned in the beginning. You advertise and you ask for written inputs first, and then you see, you know, what is the interest that you get out there, and out of that process, you can then make a decision whether you want to maybe only have one hybrid hearing in the chamber, or if you want to go out to other areas as well. But I wouldn't know based on what one would go out to those other areas, Chairperson, because I can just speak of past experience. I have seen a previous gambling bill, starting from the 18th gambling bill more than 10 years ago. And I've seen, we've gone out on hearings on those ones, and we sat in venues where there were no people, Chairperson, in George and places like that. I'm not saying it's going to be like that this time. I'm just saying all I've got in mind is the technicality of this bill, Chairperson, and you know, is there a benefit, you know, if you balance it also with budget, to just go to all the areas? Because you need to, for you to have a hearing in an area, you need to know that there's going to be interest in that particular subject matter, which is the EOT. Thank you, Chairperson.
Okay. No, thank you. Thank you very much, Mr. Vermeulen, for that advice, because I think that, you know, that's what I've effectively perhaps not said it in the same words, that if we you know, what you are advising us there, I think the question then I just have is the asking for the main stakeholders there, whether we only send that letter out after the meeting of the 17th, then is the question there, or whether we make that decision now. Member Bryant, and then Ms. Adams.
Chair, I think based on Mr. Vermeulen's inputs, I mean, I think it makes a lot of sense for us then to send out the written request and make the decision based on the responses that we receive, because potentially one could look at something like a hybrid hearing, you know, where we have a virtual component and one doesn't have to then physically go out at great expense to all of those areas. As much as we want compliance and we don't want this to be legally challenged at a later stage and say, you know, we haven't done proper public hearings, we're also cognizant of fruitless and wasteful expenditure and going out, you know, and as Mr. Vermeulen says, having empty halls and things. So if we are compliant, or you know, feel we deem to be compliant in terms of the advertising process and possibly a hybrid system at a later stage, I think that would make a lot of sense. So I would support the proposal to put it out for 30 days and then reevaluate at the next meeting in terms of the public hearings.
Okay, thank you for that, Ms. Adams.
Thank you, Chair. Now, I just wanted to latch on to what Johan and Member Brian was saying, and to reassure the committee that when we advertise, we take a broad approach as well as a targeted approach. So, for example, with a targeted approach, you are sending letters of invitation for comment to affected stakeholders, for example. And the broader approach, you're using advertising, mainstream community newspapers, for example. You're using social media. You are utilizing our CDWs to spread information. We are sending letters to municipalities and asking them for their comments, as well as to spread that request for comment as well. So we are covered in terms of like the broader communities, and then also the affected stakeholders. And then the other thing I wanted to add in terms of the proposal that was made by Member Brian and Johan, we are lucky in the fact that this is a bill that sits with us. We aren't limited by timelines, for example, that we would get from an NCO people. So if we get comments and if the committee has a hybrid public hearing but feels that it needs more engagement, we have that ability to do so. So yeah, that's just what I wanted to add. The fact that our timeline isn't limited, but then also we do have a much broader approach and a targeted approach to public participation.
Okay, I think I think if we, I'm in support of what we're saying. All that I'm asking now is that what we are proving at this stage, or do we wait to do this on the 17th of April? And if we are agreeing with what we are doing now, then presumably we would then target, probably send out those letters after the Easter weekend. So in other words, there's a bit of time then to prepare that type of letter to go out, which would then go out, once the Easter weekend has been done and dusted. Member Masipa or Member Bryant?
The Chair, I think.
Yeah.
Chair, thank you very much. I think the committee's decision is clear. They've given you and obviously the procedural officer to go ahead with the 30 days advertisement and target approach to deal with that. And obviously, lots of the final details as to how you plan it. We are the procedural officer, and obviously, advice from Johan will always come quite handy. But I think from us as a committee, really, we give you a go ahead that we get 30 days target, make sure that we don't get.
We're losing you a little bit there.
Into litigation to ensure that we takes the fair public participation process as much as possible.
Okay, thank you, Member Bryant.
Thanks, Chair. I think we got the gist of what Member Masipa was saying. I just want to support him and agree, and then propose that we move forward in terms of what has been suggested and agreed upon. Thanks.
Okay, excellent. So I think I'm not seeing any adverse comment from Member Brinkhuis. So I gather he's in accord with that. So I think that then deals with that aspect of how we're going to deal with it. I just think that we obviously need an element of chocolate over the Easter weekend to sort of refocus our minds and to get the energy back. Member Masipa, I see your hand is still up.
So you got my inputs, I'm sure.
Yeah,
I think you said you lost me, but I think but you got the gist of what I was saying.
Yes, I think we have that. We have that. Okay, thank you. Thank you very much for that. I think our next issue really deals with the consideration and adoption of the draft committee meeting minutes of 18 March 2026. So if you will recall that, it seems a long time ago, but it's just a little bit more than a week ago was our finance meeting that we dealt with our budget and the appropriations and the deliberations that we had on vote 3. And in point 3 was consideration and adoption of the report, and there we had the members who supported, and the ANC and Al Jamar then not supported the vote. And then we also considered and adopted without amendments the committee resolution tracking document and the committee minutes of 10 March. And then we had a number of resolutions there that were requested, being the growth for jobs money that was being spent on 1.495 billion, that we would just wanted PT to provide a listing of that, and the guidelines in relating to cost reflective tariffs, And then those clauses in the Public Procurement Act that the Provincial Treasury had identified as being problematic. And then the report on the update on the 3 municipalities under financial recovery plans and the state of improvement or state of recovery. I think we do have a report that is coming to committee shortly in the next month or two. So I think just looking at committee members, if that was a fair reflection of our minutes. Member Masipa, I see your hand is still up, but I'm not sure if you've raised it again. But
no, I move for the adoption, Chair. Thank you.
Okay, and I see Member Bryant.
Second, Chair.
Okay, thank you very much. So I think procedural officer, have we done our work for this Friday afternoon?
Yes, Chair, we're covered.
Okay. So I think that's, wishing everybody a good weekend then. Thank you very much, Ms. Adams. Thank you very much to admin and the team with us today, and to committee colleagues. Enjoy the weekend. The meeting is now adjourned. Thank you very much.